Welcome back everyone, I'm Philip here from BlackBull Markets. Hope you're all doing well. In this video I'll talk to you guys about trading with technical analysis. Now, technical analysis is an age-old method of trading. It's probably the most common way of trading in Forex, whether you're day trading, swing trading, scalping, even positional trading as well. We start to lose technical analysis a bit more as we start to go into the more investment side of things, but for the majority of traders, technical analysis is the way to go. So I'll talk to you guys about that, so make sure to stick all the way through to the end of the video to see how I have personally sort of changed the trading patterns, how I use them personally. I've kind of adapted it because we do know that the markets do slightly change as time goes on, as more influencers do start to come into the market. We need to also change our trading strategies, not completely change them, but slightly adapt them to the market as technical analysis start to get more influence in them. And also make sure to smash that like button, guys, and subscribe to the channel if you're interested in learning more about Forex and improving your current trading skills. So without further ado, let's hop into the charts and see what we have. Well, the whiteboard behind me anyway. So a couple of patterns. I just want to quickly brief you guys if you are new to trading. We obviously have our basic patterns, which we have the very most common pattern is obviously consolidation that we wait for, and then obviously breaks out above that, retests on that, or breaks below, and obviously sellers and stuff will come along. Okay, so that's the most basic. Now also the one thing we need to know as traders, essentially all a trader is doing is we are also just trading from zone to zone. So we're trading from point A to point B, right? So we've got this big range. So if you look, for example, on a monthly term time frame or a weekly term time frame, you're trading from this section to this section. Obviously in between we have either patterns that play out, like breaks and retests. We might have at the bottom things like head and shoulders that play out, different along the lines that as we start reaching these top areas, we might have things like channels that help us along the line as well for particular situations. And all these technical patterns fall into a category in between from these two zones and trading inside, trying to catch the train back to the top or trying to catch it back down to the bottom. Okay, so that's pretty much the whole entire goal of a trader, is trading between these. So let's again cover a couple of other patterns that we have. Now we do have our basics. Again, we have double tops, for example. We have resistance at the top. We also have vice versa double bottoms, where the market will reject and push further higher. These are all sort of trend reversal patterns tend to be. And then we have obviously head and shoulders, like you guys can see up there above. Head and shoulders patterns, we might have them at resistance zones to push back down. Obviously vice versa as well. We have reverse head and shoulders patterns playing out here as well, which all could come in handy for trying to trade reversals. Now, trend continuation patterns, there are a couple of them. We have obviously our most basic trend sort of continuation patterns if the market's already started to find its direction. We have resistance that are created, and we have breakouts of these resistances. Some of these could be anything. It could be a consolidation zone as the market starts to move. So the market could move in between these consolidation areas, and the market could break out above that. The consolidations could also be used if we're at the top of the zone to indicate where the market's ready to drop down as well. So we could have consolidation here as we reach that top of the zone, and the market could also break down below that. Okay, so these are all sort of basic patterns. And again, another one we have is channels as well. So we have basic sort of channels that are already inside the market movement. Once the markets find direction or found direction, we have that. Another pattern that we could have could be sort of these basic structures. We could have either flags where the market comes in and then breaks out, or we could have sort of pendants or wedges or whatever where the market's going to come back in. So these are all continuation patterns, but I trade a specific few, so I'll quickly show you guys what I trade and also how we can potentially use fundamentals. Now, the week that I'm making this video is a very full-on fundamental week, so I thought it'd be handy to just talk to you guys about how we can sort of use fundamentals for our trading. Now, Forex traders don't really use fundamentals that much for their decision making and trading because the technicals tend to show the story, and fundamentals can be very unpredictable, and there could be low volume during the market. So I'll show you guys how I use fundamentals in my trading to kind of get an idea of what to do, because if you're a short-term trader, technically speaking, they don't really matter too much. Okay, so let's cover, first of all, I want to cover to you guys head and shoulders. It'll be the first one that I'll be talking about. Now, we all know a head and shoulders pattern. It's extremely basic. We have our neckline, we have our left shoulder, we have the head, and we have our right shoulder. Okay, now this can be flipped around for inverse head and shoulders, but this is the basic head and shoulders pattern. Now, the way that some people trade them is they measure out this distance over here, compared to this distance over here, and they use that for a target. So that right there is a target section. Now, they only enter the trade once the market has broken this support zone, or if it's flipped around, resistance zone. Okay, and then what they do is they measure this distance over here, and they place it over here, and that's their target zone. Okay, but the issue I have with this is a lot of profit to waste. Okay, so a lot of movement in the market to waste, and sometimes this neckline could also be a little bit iffy. Okay, so let's have a quick look at what I'm actually talking about. So we all know that our shoulders are fine, but sometimes you guys have seen head and shoulders patterns. I'm sure about it when you're trying to look for head and shoulders. We see something, you know, we could even have a head, like a neckline that looks like this, where the shoulder's still fine, but this neckline is way, you know, off, or something's just not right, or we might have a sort of head and shoulders pattern that looks something like this. Okay, which just, you know, sometimes it just doesn't work. Okay, because this neckline is really skewered, and now where do we enter the trade? All the way down here? No, sometimes, you know, or here or whatever. You know, where do we take this trade? Because we're wasting a lot of movement in the market. Okay, now this is kind of where I'm talking about when the, you know, more people get influenced in the market slightly changes. The technical levels are all still there, but the patterns are not playing out so nicely. So in my opinion, when you read trading books, I don't read books that tell me about you know, how to trade technical analysis, because those books are age-old books. You know, they could be slightly outdated. The patterns and the support zones are still there, they're still valid, but the specifics and the internal guts of it, let's call it that, does not work out. Now, I've got a degree in Elliott Wave. I've studied it for 2 years, and I actually don't even use Elliott Wave to trade that much at all, because, you know, Elliott Wave is from the 80s, and, you know, the market slowly adapted, and they use Elliott Wave to trade in the stock market, where there's a much more niche amount of investors in there, where Forex is, you know, almost $6 trillion per day goes across the board for Forex. So there's a lot of influence, and we won't get these crisp, clear patterns out anymore. But support and resistance is still valid. So let me show you how I trade a head and shoulders. Now, because if you look at these technical patterns, you go, oh, how did I miss it? You know, it's there, but, you know, obviously, as the pattern unfurls, it's very difficult to figure out what's really going on. So let me show you how I personally trade a head and shoulders. Now, I look for this structure right over here. Okay, right now, I have a setup right now as well, because I also like to trade breakouts, but I trade them a little bit different. So I can cover 2 patterns in this one for you guys, okay? So instead of trading out here, I'll trade here on the retest, okay? Just a quick one. I like to wait for a retest, but we'll dive into that one a bit more as we get towards the end of the video. Okay, so for head and shoulders, I do not care about this neckline. I just don't care about it, okay? I don't care where this ends, how deep this thing retraces, if it retraces all the way back down to here. I don't care if it traces just up to here. I don't care. All I care about is my shoulder level. Okay, that's all I care about. So I don't really call them head and shoulders anymore, because, you know, the necklines and everything don't match up that well. I just call them zone re-entries to keep things simple for me. So I wait for the market to come back into that zone below the support that we created, okay, and I wait for it to reject on that. Regardless of where this neckline is, I don't care. I wait for a rejection on here, and that right there is my entry. So look how much tighter I get this entry. Okay, now yes, you can use this measurement here if you want to, you know, determine whether far you want to go. But for me, personally speaking, I will either look for coming up support, any sort of relevant support coming up. Okay, because again, remember, as traders, we trade from zone to zone. If we look at it in a shorter term perspective, if we zoom in, and all we see is this, you know, we need to broaden our minds a bit. Remember, we are trading, like I said, from zone to zone. So we're going to look for the top zone and the bottom zone, especially as a swing trader. That's what I want to look for. So I'll see if I can find a bottom zone. If not, if this is my bottom zone, that will be what I trade to. But hopefully, you know, most of the time you get a little zone down here as well. Okay, so I'll take my entry right over here, stop loss, entry over there, stop loss above both shoulders. Keep that in mind. This is very important, because the more resistance there's in the way, the more selling power will go back into the market to try and prevent it from breaking that resistance. Okay, so stop loss just above that shoulders, both shoulder lines, and then targets obviously wherever the support is. Now look at the difference from entering here, from my risk reward ratio from here to this risk reward ratio, or here. It's much, much larger compared to my risk than a normal head and shoulders trading pattern is. I get much more out of the market, I get a tighter entry, and I get a smaller stop loss, which obviously then gives me the bigger potential, okay? And I catch more of the move, and it's less movement in the market wasted as well. Okay, so that's how I trade head and shoulders. Now let's have a quick look at a couple of other ones as well. Now they trade double tops and double bottoms, very similar to a sort of the head and shoulders idea, okay? Where, you know, basic technical analysis says, you know, you have the double top and you wait for it to break this V line over here, then enter back down here once it breaks. But I mean, look at all this space, because now you're actually entering here and your stop loss goes way above here. I don't know why people do this, but again, look how big your stop loss is. It's unnecessarily big, and they trade it to whatever support is down here. So, you know, it's just not that ideal for me personally, okay? Now, again, I trade double tops here. Entry. Now, obviously, I've got candlestick confirmations. When I reach a resistance, I'm not just going to take it, okay? I've got either wick rejections or engulfing candle that happens up over here. But again, entry and stop loss above both tops, okay? So I want to make sure I go above both tops, because it prevents the market. The more resistance, again, the more selling power comes in, preventing the market from going higher. Now, I could still be wrong, but that's why we do use stop losses, guys. This is also a very crucial thing. I'll always make sure that people understand stop losses is just a must for trading. It limits your risk and prevents you from blowing your account. Okay, so they just are a must. And then obviously targets, I can go at the V line for this target, or I can also trade it to that support where other people are trading to. So you guys can see considerable amount more reward compared to my risk. Okay, so my risk reward ratio is much bigger, giving me a much bigger profit out of the market. Okay, now breakouts. Breakouts are a thing that I personally don't even touch. I'll tell you guys why. So breakouts can be anything from consolidation breakouts of the zones. So because obviously as traders we're trading from zone to zone. So it can be a breakout of the zone, or it can be like a consolidation breakout as well. I don't trade clean breakouts. The reason being, remember, there are big, massive big players in the market with billions of dollars in their pockets, and they use the market to their advantage. Okay, so we need to be smart about and think about how they would think. Remember, they're also traders, they also know technical analysis, everything. So keep it this way, keep it in mind of this way actually, sorry. So I like to wait for a retest. Now the reason why I like to wait for a retest, if we think about how those big players trade, okay, they can only enter a small amount of their position each time. So they can't fill their entire position because there's not enough liquidity on the other side. Okay, we've made a couple of videos on liquidity, so go check those out on our YouTube channel. But essentially what they're doing, they would execute some of their orders over here, and then they would actually drive the price down because they know, they don't see them, but remember, they're also technical traders, so they go, okay, well, most likely they're going to be a bunch of stops over here. They can go hunt these stops, stop them out, grab that liquidity, and then continue to fill the rest of their orders to push the market back up again. So, in my experience, I would say 75 to 80, even 90% of the time, the market retests a breakout. Go watch, go have a look. Whenever you see a breakout, majority of the time, the market goes to retest where it broke out. So, in saying that, I don't trade breakouts. I like to wait for the retest. So regardless whether we had consolidation, a zone broken, or any sort of resistance that was broken, even if we had a little double top, whatever, if the market breaks it, I wait for the market to pull back down, retest on there, and then I like to enter. Now retests, I would wait for my candlestick confirmations here. I would put my stop loss below those candlestick confirmations, whether it be wicks or engulfing candles, below that low of that retest, entry as we get the close of the candle, and then obviously support, take profits along, relevant support or resistance zones coming up there, in the left side of the market. Now, if we're in all-time highs, we might see gold go there again soon. Okay, if we're in all-time highs, I look for round numbers in my trading. Okay, that's what I start to look for. I start to look for round numbers for potential targets when the market moves, if we are in uncharted territory. Now, uncharted territory obviously just means there is no history to the left. So zoom your chart out. If there's no history, if you're all-time highs, I like to use round numbers for my targets. Okay, now another one I quickly want to cover before the end of the video. So this is the last sort of technical pattern that I like to cover is channel, as a channel. Okay, so I love trading channels, but I have a little bit of a secret when I trade channels. Now, I think it shouldn't really be a secret. You know, everyone should really know about this if you're going to trade channels. The biggest thing is never ever trade against the channel. Okay, it's a horrible error, but you guys get the idea. Never trade against it. I always want to trade with it. The reason being, okay, let me draw this for you guys. Okay, the reason being, if I have a channel moving to the upside, you guys get the idea. It's not very accurate, not very straight, but if we have the market moving inside of this channel, okay, if I decide to take my position here against the rejection of the zone, okay, so let's say I take my sell here, my stop loss goes above that zone, okay, now even if the market follows the channel rules and sticks on this, I'll get stopped out. The other issue is, the longer this market takes to go to the bottom of this channel, the smaller my take profit target becomes. So the more time I spend in this channel, the smaller my take profit target becomes. The other thing we have to keep in mind is when we trade into channels, if we're going to sell against the channel, for example, because there's an upwards moving channel, we have a bunch of support and resistance zones coming up inside of this pattern, which could interfere with our trading. Okay, so that's very, very important that we have to keep in mind. Now, the nice thing about trading with the channel, you get all the benefits because it's the opposite way. Okay, so I would personally, I'm going to wait and take a buy or a position with the channel, because if I take my entry here, stop loss down here, even if the market just sticks to this bottom trend line, I still will move into profit, right? And the other nice thing is, the longer we stay inside of the channel, the bigger my profit target becomes. Okay, so the longer the market decides to stay in this channel, the bigger my profit target becomes. Okay, that's a major benefit. That is why I always trade with a channel, regardless whether it's to the upside or to the downside, because these benefits come along with it. Okay, and another nice thing is we have these zones. Once we break above them, we have zones to help us out to keep the market in our favor. Okay, so that's the one nice thing about channels. Now, I do trade breaks of channels as well, okay? But majority of the time, breaks of channels just tend to be zone re-entry. So let me quickly explain that for you. So if this channel does break, okay, generally speaking, we have, again, these support / resistance zones. Excuse this line, it's very skew. There we go. So if this channel does break, again, we can wait for rejection. Now, be aware, when we do end up trading breaks of channels, we are trading back into support and resistance. So just be aware of that, okay, as we do trade into these channels or back into any pattern, that the market does generally have these zones that it will get stuck on, okay? Just be aware, because remember also this channel was a trend because we have higher lows and we have higher highs playing out. So just be aware of that, because once the channel is break, you're pretty much betting on the market reversing trend. Okay, so just be aware of that when you do trade against these patterns, or any sort of pattern, as a matter of fact. Okay, guys, I hope you did enjoy it. Like I said, if there's anything else you want us to cover, as always, comment down below and we'll be happy to get to those videos. If you want to see any pairs you want us to analyze, let us know down below. Or if anything about trading, or the terminology of anything you don't understand, let us know down below in the comments. We'll be happy to help. From us here at BlackBull Markets, thanks so much for watching, thanks so much for subscribing. Stay tuned, trade safe.